In today's video, I want to touch on two great companies that have seen their stocks beaten down by over 30% already year to date. Now, of course, we are going into the next earnings season, so just because you're watching this video right now does not mean you have to pull the trigger just yet. You could wait and see what happens in the next earnings report release and comments during the earnings call. That's completely fine. Now, one of the two companies that we're going to touch on is first time we're going to touch on that company. It's a very, very interesting one. Now, it's not the cheapest one out there, even with the pullback, but as you will see, it has never really been that cheap. So let's talk about those companies in this video. As always, not here to waste your time. We're going to talk about Affirm and Manhattan Associates. So if you enjoy this type of videos, hit all the buttons. Really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And a special thanks to FinChat as well for sponsoring this video. Link in the description and in the pinned comment. You'll get 15% off. Alright, so stock number one, company number one I want to touch on is Affirm. Of course, Affirm, one of the big players in the buy now, pay later segment, has a market cap of $13.48 billion. Year to date, as you can see, it's down 32.3% at the time of making this video. Now, if we look at the PE trailing 12 months, well, there clearly was no E, but the forward one sits at 26 times. It has a free cash flow margin of 21.9%. Revenue growth, expected growth 2 years out, 30.4%. EPS, we're not really getting here much information, well, because there was no E, so it takes the negative into account and you don't really get that calculation. But I'll show you what will happen or what's expected to happen with free cash flow. And of course, you can do this as well on FinChat. This is a stock research platform. You've seen me use this quite a lot on the channel in the last couple of months. Here we can see free cash flow, the expected growth for the coming fiscal years. So for fiscal year 2025, we can see that the expected growth here for free cash flow is 211.5%. Of course, we're coming off a smaller base. Then it's expected to increase another 49.2% in fiscal 26, then another 12.1% in fiscal 27 to reach $1.5 billion in free cash flow. And of course, as I said, you can find all of this on FinChat, and of course, you can look at segment and KPIs, so company-specific metrics on this platform, which you can only find here on FinChat. So for example, you want to look at, well, active customers. Well, what has happened with active customers in the last couple of years since, let's say, 2021, after the pandemic effect. Even after the pandemic effect, this has grown at a compound annual growth rate of 36.12%. If that's not enough for you, no problem. We can maybe look at what's total transactions. So if we look at total transactions over the same period, we can see here that has grown at a compound annual growth rate of 76.85%. And you can look at those types of metrics for the next company that we're going to look at and for all of the companies that we're actually covering here on the channel. So new users will get FinChat Pro 2 weeks for free. If you like it, you want to upgrade, you can use my link in the description. You'll get 15% off. I appreciate all of you that have been using my link in the last couple of weeks. Now, Affirm in the last couple of months did have a couple of announcements, some new partnerships or expanded partnerships with Shopify, with Revolve, with Adyen as well, and with JP Morgan. They did say that the value Affirm delivers to customers doubles as a revenue accelerant for businesses. Merchants who offer Affirm at checkout see 70% higher average cart sizes and nearly 30% fewer abandoned carts compared to other pay over time providers. Of course, added value, it's a win for Affirm and it's a win for the businesses that adopt Affirm at checkout. Now you might say, okay, cool, but Affirm has plenty of competition, Klarna, PayPal, for example, and some other players out there as well. That's true. But with Affirm, there is, well, they think that their proprietary technology when it comes to underwriting and risk management is best in class. There's also no hidden fees, no late fees and all of that. When you pay with Affirm, you know exactly how much you're going to pay. Okay, the interest here is also a simple one, so it doesn't compound over time. And if we look at where they generate the majority of their revenue, well, as for the last quarter, $409.4 million came from interest income, $244.9 million came from merchant network. Then we've got gain on sales of loan, virtual card, and service income. That's the smallest part right here. The fastest growing segments I'm saying, because Three segments here are growing at a compound annual growth rate of over 50%. Of course, that's since the December quarter of 2020. That's virtual card, interest income, and servicing income. And then gains on loan, that's actually improving and growing much, much quicker than that, 71.2%. If we look at the active customers have grown at a compound annual growth rate of 47% since December 2020. Average order value did come down quite a lot actually. We're down 50% since, well, I won't say the peak, but close to the peak here back at the end of 2020. And if we look at gross merchandise volume, that has actually grown at a compound annual growth rate of 48.5%. Looking at transaction per active customers and total transaction, that of course has grown quite nicely as well. Now you might ask, isn't this bearish, right? Average order value coming down so much? Well, yes, but before they were mostly going after high ticket items. Now as they expand more and more, of course, that comes down. But as you can see, GMV continues to go up. Transaction per active customer continues to go up as well. So that's the most important part. Then looking at margins, gross profit margin, that has also improved. Of course, it did peak during the pandemic. And if we look at free cash flow margin, that was negative. Last year, that was 12.5%, and that's improving by the quarter. And with Affirm, you're getting also a top-class management. Max Levchin comes from, of course, that PayPal founding mafia. So when you want to go and look at specific companies that maybe are feature-like companies, right? Because PayPal also offers buy now, pay later, for example. So you might want to go just with PayPal. But with Affirm, if you look at all the research, all the, well, analysts talk about buy now, pay later, Affirm is usually at the top of that list. Moving on to company number 2, and the first time that we're touching on that company on the channel, that's Manhattan Associates. The stock is down close to 40% year to date, has a market cap just under $10 billion. What do? They develop, they sell, deploy, service, and maintain software solutions to manage supply chain. Very, very specific to supply chains. Some of their competitors are, for example, Oracle or SAP, but they're very, very focused when it comes to supply chain. Some say they're the leader in that segment. Now, if we look at pricing, trading 12 months PE 46.6, next 12 months 36.2. So yes, it is on the expensive side despite the stock being down 40%. That might be part of the, let's say, non-bullish case. But if you look at margins, for example, free cash flow margin 27.5%, still very, very good. Right now, one share will cost you $160 to $163. Average analyst price target sits at $214.2. Now, while revenue might not grow that fast in the next coming fiscal years, actually free cash flow is expected to reaccelerate quite nicely, only growing 9% year over year in fiscal 25, 12.6% year over year growth in fiscal 2026, and then 26.4% in fiscal 2027. Looking at where they generate the majority of their revenue from, Americas, of course, then you've got Europe, Middle East, and Africa, and that's actually growing faster than Americas. And then you have a small segment here, which is APAC. Looking at the business segments, you've got cloud subscription revenue, software license, maintenance revenue, services, and hardware revenue. And of course, as you can see, the cloud subscription one is the one that has been growing the fastest. Touching on the two fastest growing segments, which is services revenue and cloud subscription. Those are, well, when it comes to cloud, but services was a fast growing segment. Right now, last quarter, that was basically flat. And yes, this is a downtrend. So this is something to keep in mind, but still growing quite nicely, 26.5% year over year on top of a quarter that grew 38.2%. And as you can see from this chart right here, well, cloud subscription is becoming bigger and bigger, but the biggest chunk at the moment is services, but that is coming down a little bit. But the cloud one, that's where, well, the money and the future growth is going to be at. Now, very, very cool thing to look at is this. Remaining performance obligations since the December quarter of 2019, that has grown at a compound annual growth rate of close to 60%. Here, of course, yes, this is decreasing. Year over year growth is decreasing, but it's still increasing 24.7% year over year as for last quarter. Before that, that was 27.3, 29, 31. So this number, this thing right here, this metric is still very, very impressive to look at. Then if we look at margins, free cash flow margin, gross profit margin. Gross profit margin did decrease a little bit. We're going all the way back to 2014, but since 2022, that has increased a little bit. As for free cash flow margin, that has increased from 17.2% back in 2014. We're now at 27.5%, and that as well has increased quite nicely from the 22.6% in 2022. So this might not be the fanciest, sexiest business that we talk about, but what I'm seeing here is a very, very solid business with high margins, and that is still expected to grow quite nicely. Now, some of the key product areas that they focus on is one, warehouse management systems, transportation management systems, order management systems, omni-channel commerce solutions, supply chain planning, labor management, and ER management. Yes, again, very, very focused on supply chain, which means, yeah, right now with everything that's going on, maybe it's going to be a turbulent time for them in the short term. But on the flip side, wouldn't you want such a system right now because of everything that's going on with, well, maybe relocating supply chains, changes in the supply chain? I think that would make sense, right? So I think they could be here a very, very big winner for the future. Now, of course, these aren't the cheapest name out there. So there's no point in rushing to open a position and that's about, no, I think we have time, especially with this earnings season starting right now. I think we will have time to look at each and every earnings report, listen to management commentary during the earnings call, and then make a more educated decision. But I did want to point out those specific companies in this video because I do think that a lot of companies have gone under the radar. Everybody's focusing on the Max 7 or some of the most important, or should I say most popular names in the retail community, and then you miss out on maybe some other quality names out there. So Affirm, Manhattan Associates, those are the two for this video. If you have some other companies we need to look at, let me know down in the comment section below. Like, subscribe, do all of that. Do check out FinChat as well, and I'll see you all in the next one. Bye bye.